Hello, my Teaser King family. Fresh off my baseball football class. Now we'll go get some economics. Mark McGuire, great show. We will talk about that. Start with our gold. Little free market. I bought this, which I will explain how it works in a market. This is Celtic light gray sea salt, which is extremely healthy for you. I was watching some video from some lady who's one of these holistic doctors, and she made a case. I said, I'll give it a try. Because I don't normally have salt, but I'm going to try it. All right, gold. Gold's back to 25.10, so it held the 25s very nicely. Silver, we're trying to get to 30, but it's a whole lot better than 27, which again, we all know it's price fixed. 25.10 for gold on its way to 3,000. Just a screaming buy. We didn't really get a lot of the 10 o'clock drop from 24,502 to 24, dropped $6 and then jetted up at about 10.15, up $20, and then it's pretty much stayed at this 25.10, 25.11. So very good news. We're not seeing it back down to 24. So everybody's worried 24, 2,300. No, these are freezing. These are going up and then they're not really coming back down, and we're waiting for the new up. So everybody's ready for the US to do their little derivative downs so they can buy it cheaper, and they said, fuck it, we'll just buy it and buy it and buy it. Mark McGuire, excellent video today. Look at the title, 60 days to brics gold. It doesn't get any better than that. We're going to jump into that in a minute. Now, how does a market work? So some lady recommends this. This creates, here's the product, Celtic sea salt, not the pink salt, the Himalaya, and not the table salt. In fact, you want to never use the table salt. They've bleached out all the good ingredients. This has 182 minerals. I'm not sure if it says it. She says it. I'm not sure if they say it. Anyway, you just put it, when you're cooking with it, just a little. You don't need too much. It'll be too salty. Now I'm trying it. Normally my feet get kind of gouty with salt, so I'm testing this to see if they don't. Right now they're fine, so this will be curious. So I have the Himalaya salt, and now I've got this also. I'll use this a little bit more just to try it out. But how is there a market? They've created demand with it. It's healthy for you. It's going to cure you. It'll help your blood pressure. It'll help this and that. It's good to cook with. It's very tasty. They created demand. I go buy it. Now, if the price is affordable, and this was $4.97 for 12 for a half pound. If this is affordable, then I buy it. It's a good trade. So I traded my dollar for my Celtic salt. So this is very healthy. I'll be in good health from it, and this is worthless. So I made the trade. But if this was $35, I wouldn't have traded it. It would have been too expensive for me to trade it. But for $4, it was a good trade. And I went to Walmart yesterday. They have it, but they have it. You had to like order it, and then there's shipping, and it's like, fuck, you can't just carry it at the store. So I'm in the salt section at Walmart. I see the Himalaya, but I don't see this. So I could have ordered it from Amazon, or it's much, they want $5 for it and $5 shipping. Here I was able to go, drive to the store, pick it up, and I'm done. So anyway, but that's how a market happens. They create a demand, the price is affordable, and the demand, because I wanted it, I paid for it, I'm able to get it. And that's the key to it. I'm able to, they have it in supply, and it's a free trade. It's a trade where I trade money for that. But that's how you create demand. However, if there's no demand for this, if nobody wants it, it's worthless. They can put $1, 2, 5. If nobody wants it, it doesn't stay on the shelf and it goes away and they don't order it anymore. Sort of like this and sort of like this. When the demand stops, when the music stops and there's no more demand, they don't have a value. And that's where we're getting to. So back to Luke's friend's question about I got 4 million in my 401k, and with the 4 million, I want why would I want gold? Well, because you're in paper. So this is my paper Titanic. So the Titanic is all the paper money and it's all going to zero because it's all worthless. The gold is the lifeboat, right? So you're always trying to get to the lifeboat, but you got to realize the Titanic's sinking. So people with a lot of money in their 401k don't realize the Titanic's sinking. What does he do? At what point does he get out of his 401k and into gold? Is it the gold price or is it his $4 million is now worth 2 million? At that point, is he going to sell? At what point, which I'm sure he has no idea, will he sell his gold price to get into, will he sell his stocks to get into gold? So Luke said, well, I think at 15,000. I don't think he has a target because I don't think he understands. He doesn't understand the dollar going out. So how could he, if I got 4 million, why would I think to sell? So he has no counter move. If your stock goes, let's say you buy Coca-Cola at $50 a share and it goes to 60. Okay, great. I made money. At what point is your sell price? All right, if it goes back to 52, I'll sell it. Yeah, because I want to make profit. Or if he buys it at 50, what's his sell price? 40? So if it starts dropping and it goes to 40, are you going to hold it or are you going to watch it go to 30 to 20 to 10? At what point do you realize something's wrong and I got to get out? So at 4 million, is it 3 million? Is it 2 million? Is it 1 million that he realizes he's fucked? But he won't do it now while he's waiting until he hits the iceberg. And we've hit the iceberg. And it's called Mark McGwire 60 Days to Brics Gold. That's his iceberg. Do you think he understands that? No. Do you think he's looking for it? No. He's not even prepared or understanding there could be a problem. This is the problem with most people. They don't see it coming. They don't see brics 60 days out. For some reason, they clearly see the debt at 36 trillion and are ignoring it. Well, it's not I don't know the debt. It's the government. Yeah. Okay. And that's not going to come back to bite you. Yeah. Okay. He doesn't see the banks having problems or the housing having problems from all these other countries going broke and all the people in the other countries who have their money in US dollars wanting to get out of them. He doesn't see that. That's what's going to collapse the stock market, the housing market, and the banks. And so being unable to interpret the ice on the Titanic was simple. You ran into an iceberg. In finance, it's not simple because you've got to know what the icebergs look like. The icebergs are inflation. The icebergs are brics going to gold. Your iceberg brick is gold. If you're in paper, the best thing you can do is get out of paper, go into gold, and protect yourself. And if nothing happens, you got $4 million worth of gold. But as Luke suggested, well, at 15,000, he'll start buying gold. There ain't going to be gold to buy at 15,000. There's gold to buy at 2,600. There's not gold to buy at 10,000, 15,000. Because that means everybody bought and knocked the price up. There's nothing left. It's a very limited asset, gold. 250, let's say 260,000 tons. And of that, I guarantee you there's all gone. All you see is the people buying what people are selling. But if nobody sold, there wouldn't be any to buy. I go to my store. The only reason there's something there is because somebody came in and sold their gold And thank you for letting me buy it. You're idiots, but I appreciate you being idiots. That the owner can't, he just shakes his head, smiles. Why are they selling? I go, because they have no idea that it's going up. So right now I'm in between. I haven't bought in a couple of weeks. We'll see. But I am very confident $3,000 gold. Maybe I'll buy a quarter ounce. It's hard for me to buy ounces right now because I don't know how long I'll need the money. I did get an interview next Tuesday with the Tenaco. I don't know what they are, some manufacturing company. It's a half-hour phone interview, so I'm just going to be cool, and I do not, I'm not holding my breath after the other bullshit interviews. I'm not holding my breath. So you're trying to get off the Titanic, but in economics, it's what is the icebergs? And the icebergs are printing the dollar to death, the debt, inflation, where you're ruining the dollar. So the debt and the inflation kind of go hand in hand. You're ruining the dollar. The dollar has no value is the iceberg. That's your biggest iceberg. Is the dollar is it has no value. It's gone. But you don't understand it. Well, I got $1. Okay, we'll go to the grocery store, and how much can you buy for $100? Oh, 5 items. I bought 2 steaks. They were $15 a piece. They were on sale for $9.99. And then I got chicken. The chicken breast was another $10. And then I got some fruit, which was like $2.99 a pound for nectarines. Just amazing, and there was a $50. I bought 4 items. There was a $50 bill. It's just insane, right? And that's really the problem. But you don't realize that. So you don't realize that you think costs went up, oh, the steaks. But what you don't realize, or what you say to yourself is, oh, I bought meat, so it is more expensive. What you don't realize is it's not the cost, it's not the prices going up, it's the value of the dollar dropping. And that is the inflation that you don't know about. So just keep in mind, inflation is the value of the dollar going down because you printed too much. And it kills the dollar. It goes out because nobody wants it. And that's what's going to happen because it's not backed by anything. That's what BRICS is doing so brilliantly, is coming out with a gold-backed currency. They get it. Well, if we have it gold-backed, we'll be fine. So once you do that, then it's fine. So that's really where it's at, is understanding the logic that the dollar by itself is worthless. It's the gold that makes the dollar worthless because you price the dollar in gold. And Saudi Arabia is going to want gold for their oil, and the whole U.S., Canada, the U.K., they're all broke. There's nothing they can do unless they come out with gold-backed currency, which apparently they're too stupid to do. The MMT guys say just keep printing. You print your way out of a depression. No, that doesn't work. But they'll do it, I guess. Until at what point do they realize that the boat's underwater and sunk? On the Titanic, you can see it, right? You can see the boat going down, and now we're in the water. We can see that. You can't see it in economics. There is no point you can see the dollar, I think, until you go to the grocery store and everything's very expensive. Then you start realizing you're in the water. So it's just not as black and white as the boat literally being, this submerged. There's this much left. You're on the deck and there's water all over. Then you've figured that out. But in economics, how do you know when you're underwater? How do you know when it's sunk? How do you know when it's on the bottom of the ocean? And that's really the key to it. And we will see. So that's the lesson here, is to understand that. You understand gold and Rolex and Mantle cards because those are assets. They are limited and they're highly in demand. And that's the variables you're looking for in economics to survive. If you don't have those and you're in money, so this is where all these millionaires are in, oh, I got $1 million, I'm fine. Well, no, you're in dollars. You're in something that doesn't have a value. You're not in something that is a Rolex where the Rolex has the value. You're in money that doesn't get backed by anything. It has no value. So what the fuck are you're talking about? That's crazy. That's the problem, right? You're not understanding the dollar by itself has no value. And you don't understand inflation is not prices. It's the money being worthless is the inflation. That's really what inflation is. Money is worthless. The costs are the effect if they can charge it, but not everybody. Frosted Flakes can't just say I'm $20 a box because nobody's buying it. So they can't just raise the price. It's the dollar that I need 5 of them to buy the box of cornflakes now, where it used to cost me $1 or 99 cents probably. If only we could go back to the 1960s and see what everything cost. I remember going with my dad. I was just a young kid, probably in the mid 60s. And we went to get gas for the car and it was 19 cents. And, I said to myself, that seems really cheap, 19 cents. I remember getting my baseball cards. I'd go to the drugstore with a nickel and you had that machine and you'd put the nickel in the slot and you'd push that in and then take the nickel and you'd pull it out and the 5 cards would come out. Well, imagine doing that now for 5 cents. And I could have pulled out Mantles and Bobby Orrs because this was mid 60s and depending on what they had loaded with. But God, that would have, if I was running that store and I'm stocking that machine, there ain't an Orr or Mantle in them. Sorry, they're in my pocket. You're not getting any of them. All right, so now we understand gold 25.12. Nice, didn't get hurt too bad on its way to 3,000. To stock up for every 50 ounces you have, every $100 it goes up, you make $5,000. And that is something nobody looks at. All right, without further ado, let's go to Mark McGwire. I'll do a section, then walk you through it. Pretty good, very good show today, very good class.
A unbacked petrodollar will have insufficient.
All right, we don't need the
things start to happen in September. Now, perhaps let's start first by looking at
I'm going to take you to the summary first, and then we'll get into it.
Also, given that the SGE is importing
Shanghai Gold
volumes of
Exchange.
silver, the moment 2,500 spot gold was overcome, the SHFE traders began to also pull the buy trigger into deeply oversold comex and spot silver. That's so spot silver for delivery and upcoming direct comex loadouts. So in summary, Shane, under the short-term chart chatter, as we call it, we've been witnessing a Western paper market managed retreat as physical gold prices are increasingly being settled outside the CME LBMA's reach. And in fact, to sum up what we've previously outlined, this widening chasm between the Fed and the BIS is now becoming really hard to ignore because, as I say, on the other side of the globe, every other central bank is now long. Now, we looked at the evolution of this pivotal divergence in great detail, as I say, over the last 18 months, actually. But essentially, the BIS recognized, of course, that Glacius beta-tested upcoming BRICS gold-backed currency to be launched in October was impossible to ignore and has chosen collaboration. That is the summation of it. And we just have to connect the dots to the point that the US Treasury simply must revalue its rehypothecated gold assets to market. We've evidenced the Fed, the only central bank, as I say, short gold against the dollar. Its divergence has become hard to ignore. Whereas the BIS has a mandate to revalue physical gold as the only other liquid first-year asset class to trade against US Treasuries. So really, October the 22nd is the break point where the US Treasury, alongside every other global central bank, have to join in unison to revalue their respective gold revaluation accounts. A simple process where each central bank sells their current gold at market and rebuys it at market or thereabouts. So following Nixon's temporary 53-year fiat experiment finally coming to an end, we're just about to witness, privileged to witness, the next pivotal event, the launch of the BRICS gold standard hegemony. In direct opposition to the Fed, the BIS has already moved to embrace a gold standard. So guys, there's only one question, and the only one question remains. And yes, it is the one question, and it is Robert Kiyosaki's question. Are you ready?
Shut the fuck up. Okay, so what did he say? BRICS, 60 days, definitely going. The BIS, Bank of International Settlements, is going along with it. You either fight it or you join it. They've joined it. The Fed is the only one fighting it and losing badly. It's 63 days, like the war. Russia's 73, Ukraine nothing. BRICS 73, US nothing with gold. It's coming out. It'll be I don't know, I guess revalued. Kind of confused. I don't know what he means because it's the price is 25.12 right now. So what does he mean revalue the price? So I don't know. Does that mean it comes out at 5,000 or what? I don't know. But we will definitely see a much higher price. So definitely BRICS coming, definitely higher gold prices, definitely the BIS joining. So I wanted to get you that. That's the summary. So now let's go back to the beginning and we will listen to McGwire.
Start first by looking at a really high level bullish gold and silver drivers, and then we're going to drill down into the various actors' footprints in the live charts. Now, last Thursday's little noticed August the 15th, 1971, that's a date that never goes by in my mind. That's that calendar date. It passed with no fanfare and was completely ignored by the cheerleading Wall Street money honeys. Yet it actually marked the 53rd anniversary of the very day Nixon took the US off the gold standard. And as has been the fate of every other debt-based fiat currency, their 35-year average lifespan have ultimately led into their hyperinflationary destruction. Every single time, last 5,000 years. And while we remind ourselves of this anniversary every August the 15th, so as to really recalibrate the current 98.5% loss of the dollar's gold value on its way to zero, of course, this year we look ahead to October the 22nd, 2024, the pivotal day that the US dollar hegemons slides off the end of its slippery slope and hits an impenetrable golden bricks wall that is just 45 market sessions from today as I'm recording this episode. Now, a very long story short, the sole reason the US dollar had exceeded a historical 35-year debt-based fiat currency average life cycle was because Nixon moved to peg the dollar to oil from gold, forcing other countries to buy dollars to purchase or trade oil. And in return for adopting the petrodollar, Saudi Arabia received US military protection. And this was timed perfectly with the 1970s energy crisis, and with oil jumping in price, the Saudis channeled all this newfound wealth into US treasuries, a cozy little protection racket that has endured for over 50 years. However, and also completely missed by the Wall Street money honeys, is the moment the Bank of International Settlements revalued gold as a competing first-tier asset class in January 2023, directly competing with US Treasuries. It provided Saudi and fellow BRICS Global South members an alternative gold-backed foreign exchange currency to actually begin to trade the multi-trillion dollar oil and energy sector alongside the 2022 weaponized petrodollar. Now, given BRICS countries produce or consume about 85% of the 102 million barrels a day, alongside the 6 trillion global energy market, the upcoming formal launch of the non-dollar denominated BRICS gold-backed settlements currency in October, which has largely evolved following the dollar being weaponized in 2022, it will accelerate the demise of the fiat dollar, which we understand is no longer backed by gold. Of course, it's not backed by gold, but as oil and commodities begin to be priced in gold grams, in direct contrast, the unbacked petrodollar will have insufficient velocity behind it to survive in its current form. Also, as oil begins to be benchmarked into a rising significantly higher gold price, gold priced in dollars will likely double, if not triple, into which the $2 quadrillion derivative market would implode, bringing down the entire too-big-to-fail daisy chain of banks. Unless...
So, what new variables have changed? What is the problem for the Titanic? You got rid of the petrodollar. So we didn't even talk about the 36 trillion in debt, but because oil will be priced in gold, everything implodes, all these derivatives, which means all these banks are going to implode because they got all these derivatives, which are billions and trillions of dollars that will have no value, because they'll be priced in dollars and everything will be priced in gold and oil. Oil will be priced in gold. Dollar will be priced in gold. But our dollar, since we don't have any gold to back it up, will be gone. And as he said, gold will go double, triple. You know, like I say, I don't know if you take me seriously or not when I say $20,000 an ounce gold, but I'm conservative in that number. I'm not stupid. Like I said, I got a master's and I know, big deal, but that's a conservative number, but I'm laying it all out. Why? I'm giving you the reasons the Titanic's going to sink. And that's what you got to realize, that yes, he knows what he's saying. And I'm saying it not to sell on anything. I'm saying it just, hey guys, this is what's happening. There's no, buy my gold or buy my silver, none of that shit. Like these guys do on these little shows. Oh, come buy my like alligator. I'm on a Substract. Yeah, so you can make money selling your stuff. Yeah, that's great, alligator. He keeps getting buyers who are with stolen credit cards. So that's what you got going. So that's where we're so positive on the price going up. But it only works if you have it now. So you're Mr. 4 million. You should be buying your gold now when it's 2,600 and available. But if you don't buy it now and it doubles or triples, so now it's 10,000 an ounce, you think it's going to be available? All the buying that has to take place, besides all the central bank buying that has to take place, you might be able to buy 3 or 4 ounces, but you're not buying $1 million worth. It's too late. That boat has sailed. So You can see where it's going and you can see why. So that's the iceberg hitting the Titanic. And this is the Titanic. And this is the Titanic. You better get off the fucking boat.
That is, the US Treasury resolves or revalues its 8,134 tons of gold to compete. Now, that's really where we see this sort of process, de-dollarizing process, accelerate.
Now, Andrew, if I'm not mistaken, back in November 2022, we're talking 21 months ago, you drew attention to the exact moment that the BIS and the European central banks, they split away from the Fed's gold suppression mandate. And then in unison, they started ramping up, you saying they were buying. You know, these guys are all buying physical gold, and they're also, they started their repatriations. And now you've been tracking this BIS effort to ally itself with the BRICS banks more recently, and we've had some questions from the community on how this would most likely play out. Can you step us through this please?
Yeah, Shane, in readiness for gold being revalued, the BIS split away from the Fed's gold-dollar FX gold interventions, which they'd been a party to, profitably been a party to. What they did was we figured the exact moment that they repatriated every single ounce of their over the 500-ton, 50-year high counterparty risk derivative swaps and leases. And they did it exactly 1 month before they revalued gold as a first-year asset class on the 1st of January 2023. Now, this left the Fed as the only global central bank attempting to cap gold rising against the dollar. Now, the BIS divergent path, it really holds an expectation that gold grams will once again return to benchmark the price of all goods and commodities at substantially higher dollar-denominated gold prices. And as you say, we've been tracking the BIS efforts to split from the Fed and to go long gold on their own books so as to de-risk the physical gold sight accounts that they manage for Western-facing central banks on their behalf. And of course, before this, there was little independently to support this until, that is, the BIS laid their cards on the table a few months ago. Now, we've been tracking the evolution of the BIS currency after they reacted to the early beta testing of Glasnev's Option 2 tokenized gold-backed commodity currency in January 2023. Now, after correctly weighing up the scope and scale of the de-dollarization effect that this BRICS adopted gold-backed token would have, the BIS, this is important, the BIS chose collaboration, whereas the Fed chose confrontation, significantly widening this divergent BIS to Fed path. Now, let's connect the bigger dots from the first sign. Freshly reclassified first-tier gold was being tokenized by the Sino-Russian alliance. Now, if you remember, Shane, we drew attention to the Russians' first trial efforts to tokenize physical gold in our 13th of January 2023. Goodness me, can't believe it seems like an age ago. But yeah, the 13th of January 2023 was our first episode of 2023, and which we immediately picked up by no coincidence, directly following the BIS revaluing physical gold on that day as a first-year asset class. We reported how the LBMA professional trade got blindsided when Sberbank, Russian Sberbank, their collateralization move early that Tuesday morning, and it was a gold collateralization move that was completely off the radar for most futures market participants. Now, if you recall, short sellers and cartel member TD Bank, and we talked about them at the time, they'd issue a note admitting that they had completely misjudged bets seeking lower gold prices into the end of the year, and they come in looking to short the market, and suddenly it forced them to short cover their house and their client's position. How embarrassing. I mean, they were wrong-footed, and their words still ring in my mind. Who in the world is the mystery buyer driving prices higher? Their words, as we printed it, as it was printed in at the time. Now, they weren't alone. What this did was left the ring-fenced CME LBMA multi-trillion-dollar derivative trade extremely wrong-footed. Now, while the first tranche of physical gold purchased and tokenized by Sparebank on the decentralized Stellar blockchain network was capped at 270 million, which seems small, at the margin, this was a big deal, and it was the trial. Not only were these gold tokens immediately oversubscribed downstream, but it also exposed the first notable dollar index, gold, and US Treasury correlation disruption. Suddenly, they were rising together. Both gold and the dollar index were riding in tandem, and it disconnected from the US Treasury correlations. And so what we're saying is, at the margin, this physical trade left many market participants just simply scratching their heads. Now, the Sparebank trial run was a far bigger issue than was actually realized or priced in, as it opened up fresh buying and the ease of physical delivery of Basel III NSFR compliant COMEX EFP outflows. Remember, the EFPs is just the back door of the COMEX, where literally these outflows, because as soon as Basel III were forced the compliance in the over-the-counter markets to be fully backed, what it did was force anything outflowing from the EFP to land in London to be 96% deleveraged and converted into bullion. This is a huge pivotal event, and marked the beginning of several things. And albeit for a different reason than when the March 2020 lockdown slammed the EFP doors shut and it broke the paper to physical conduit, these unfactored COMEX outflows pose a major tail risk. So to the so-called LBMA cartel, who through their reliance on the asymmetric, that means the long short futures, meaning they weighted 96% leveraged COMEX shorts against unleveraged NSFR compliant hedges, asymmetric in that sense, meaning that these synthetic traders had bet heavily against governments starting to actually move back to buying gold and gearing up to paying for goods with inflation-busting, non-dollar denominated gold-backed currencies. And as you say, Shane, we've followed the progress of this BIS currency, which they have labeled MBridge. We talked about it a few times now over the few months, and we've assessed its recent testing of it calls the unit, the ecosystem's called the unit. And in summary, this is a BIS facilitated, fully fungible, 40% gold-backed token, which through adoption by the participating BRICS currencies is set to really formally launch in 45 sessions from now, and in sufficient size to begin to facilitate tokenized, non-dollar settlement of the multi-trillion-dollar oil energy trade. Now, while this trade is 40% gold and 60% blend of BRICS currencies, which mirrors Glaziev's option 1 trade versus his option 2, which is tabled as a direct gold-backed commodity currency, which, by the way, is not off the cards. It is yet to be added in concurrently. The BIS offering nevertheless allows, really, as in its current form, for the gold-backed unit token to price all tradable goods, including commodities, when they're traded amongst the BRICS participants. Now, if you remember, Credit Suisse Zoltan Pozsar, he's so far ahead of the game, and he posed that question right back at the beginning of 2023, when he looked at the potential for Russia to kick back against the oil sanction cap, potentially offering, in his word, 2 barrels of oil for the same dollar price per gram of gold. Actually, quite salient thinking. Effectively, what he was talking about there was using gold grams to purchase oil, likely doubling the price of gold at the same time. Now, while this is still ultimately on the cards, the Russian central bank kickback, we saw implemented that Tuesday morning in January set into motion a wide-ranging de-dollarization move that was about to begin monetizing a wide spectrum of commodities, of which the Sino-Russia and the BRICS alliances hold 85% of all the global trump cards. Now, I mean, I can't remember it offhand, but as Pozar had warned on this oil cap issue, I mean, I'm using his words, really to the point, banks active in the paper gold market would face a liquidity shortfall, as all banks active in commodities tend to be long over-the-counter derivative receivables hedged with futures. That's a risk we don't think enough about, and a risk that could complicate the coming year-end turn, as a sharp move in gold prices could force an unexpected mobilization of reserves from the overnight RRP facility to banks, and expansions in balance sheets, the SLR, and risk-weighted.
Okay, enough of that. So we see what's happening. We see this is real. We see oil going to gold. We see the gold-backed currency is official. It's 60 days out. That's the iceberg. What do we do about it? Well, the 401k people don't understand it, aren't doing anything. Well, if there's an iceberg out there, you better guard against it, or you better have plan B, which they don't have. This is where most people are getting fucked. They don't even understand. They're on the Titanic. They don't understand they got to get out of the dollar, and they don't understand what, if they even know what BRICS is. I don't know, but you better get out. You better realize BRICS is the iceberg. And all you can do is be getting the lifeboat, which is that's why we're in gold and silver. We're in the lifeboat. Gold's going up because of the central bank. Silver is still not. And all I can say is it's a great buying opportunity. But you've got to understand these aren't stocks. These aren't something that is $30 today and $40 tomorrow. These are a big boat. And it takes a while to turn and go and start the engines and move. So that's what you must understand about this whole iceberg, right? When you buy silver, you're just, it's so cheap. You're just, I don't expect anything for a year. You almost got to say that. When I bought gold, I gave my girlfriends a little bit of gold and silver. I said, but it won't move now. Don't expect tomorrow. Gold, I gave a quarter ounce out, and it was, I think, $350 at the time. And I said, this is going to go up a lot, but don't expect it to go up now. Just put it away, but it will go up. And now it's 700. It's doubled. And the same thing with the ounce. I bought it at 1,600, 1,700, 250 here. When I bought this, I never anticipated it being worth, I paid $550 for it. And the gold was $250 an ounce. I never expected this to be worth $2,000. And it's going up and up and up. It's going to be worth more. Hey, Pat, how are you today? Hope you're well. So Mark McGwire, the title, you asked me, what is my confidence? And his title is 60 Days to BRICS Gold. And that's what I'm playing now. I just needed a break from it. But in 60 days, you're going to have a gold-backed currency worth a hell of a lot more than what it is now. It stayed at 25.12 today. It got back into the 25s. The option expiration date is next Tuesday, the 27th. There'll be a little stress on the price going down so they can get out of their derivatives. And then it's clear sailings. And then it's gold buying for China, for India, and then China, and then BRICS in 60 days. It's announced, it's official, it's gold back, and it's 100%. Today is the day the Titanic is getting flooded big time. Yes, I'm good. You must be very happy. Well, I'm satisfied. Let's put it that way. Watch silver will blow up soon. Well, that's what I was just commenting on. When you buy silver, you can buy silver at $30 an ounce now. I'll probably go buy some next week. And what you got to realize, it's not, like Apple or Amazon. It's not going to go up 5-10 points a day. It's just not. It's going to go up, but you got to be patient. I remember I gave a girl, I'm at a hotel and I liked the clerk, and I gave her, it was her birthday, I found out. And I had silver I had bought from, here in the car. So I gave her an ounce of silver, happy birthday. She knew what it was. It was probably like 25 an ounce at the time. And I said, it's going to go up, way up, but not right now. You got to give it time. You got to understand it's not going to jump. Like my chain, when I bought it, it was just to buy the gift. It wasn't planning on the price going up. I paid $500 for this. It's got an ounce of gold at 18 karat, which means if, let's say it hits 28,000, this will be worth 2,800. This will be worth 2,100. This will be 3/4 of an ounce is what the price will be. And it's really good gold, and it's 18 karat. So, but when I bought it, I never thought that it would go. It wasn't the intention. It was my master's gift. And that's the point. So people buying silver now have to realize it's not to expect it to go up tomorrow, but it will go up. It's a nice safety feature, but it's not going up yet, but it will go up. It'll get to 100 and it'll get to 1,000, but it's not going to do it tomorrow, but it will do it, because as gold goes through with this whole brics thing, silver will tag along. And that's what money is. Money is gold and silver, not just gold. It's the gold standard, but silver's still there. And it's not volatile like Egon says, because it's volatile under derivatives, but not in a regular market. Like I say, Rolex, $60,000 for the Rolex. It's not volatile. It goes up to 65, but it doesn't go up and down because it's that limited and that much more in demand. The naked shorts are on the last legs, keeping silver down. Well, they're not on their last legs because they're not Basel III compliant where they have to sell it. It's the demand from India and China and Saudi Arabia wanting these solar panels, just wanting silver for phones and computers, and then people buying it. In India, it's wedding season. They buy gold and silver. So it's just demand, where gold's really all demand because it's the gold standard. They're buying it as money. Silver still has the practical approach of making things, as well as then it is money, and they will have a double whammy, because the people who want it because they can't afford gold are going to buy it, and the people who want it for solar panels are going to buy it. So you're going to have double the action, and it's not bad. It's that's what, 600,000-700,000 tons. Gold's 260,000, let's say. So that's what, 700,000 tons. It's still very limited silver, and gold nothing happens to gold, right? You still have Julius Caesar's coin. It's just been melted down into a maple leaf, but it's indestructible, and silver is destructible. So not only you have it in the solar panels, when it wears out, you throw it out. There's nothing you can do with silver when it wears out. It wore out. So then there's even less of it because that's been going down, and they really have no idea. But there's a lot more people with a lot of silver because it's cheap, and they're buying it with the thought, oh, it's going to go up any day now. And it's not, but it's still a good price, but it's not a real price at all. We know it's derivative hammered. It's close to 30 today is all I can say. All right. Let's see. Back to Mark.
Assets. That's the last thing we need around year end. And he was talking about that in 2023 for the end of 2023. Now, while his salient predictions have morphed, with the BIS adopting freshly NSFR Basel III compliant physical gold being revalued into a non-dollar denominated first-year asset, but ultimately the de-dollarizing end result is exactly the same.
Now, Andrew, you've been tracking the progress of this Glasniev's gold-backed currencies and the beta testing now for almost, I'm thinking about 18 months, maybe a little bit more here. And it seems like the BIS has moved to circumvent the U.S. Sino-Russian sanctions with this gold-backed unit. They call it the unit, right? The token. And as you've been reporting, Glasniev has been directly involved with its structure. Can you sum up how this is rolling out?
Yeah, really important. So really, I'm kind of summing it up because there's a lot to it. Glasniev's gold-backed non-dollar based currency originally, as I say, took two forms. One was backed by an SDR-like amalgamation of BRICS currencies with an element of gold backing, and the other, his preferred option actually, of a gold-backed commodity currency. Now, given the sheer size of the Sino-Russia aggregated monetary gold accumulations, pre-planned and organized, and they're very conservatively estimated at over 40,000 tons. And obviously, we've looked at this before, but if you aggregate that with Citizens Gold in China, that could easily be 60,000 tons, no problems at all, which they could be. They could actually be commandeered. And we've talked about how that might be done. They were on an equitable lease basis where the gold would actually be returned to clients, but it would actually enable, in a case of war, to be able to use it. So with that kind of volume, that kind of depth of physical, I mean, when you compare that to the rehypothecated few tons that the Fed has, I mean, basically the BIS initially sought, obviously, to compete with Glasniev's currency. But following Glasniev's July meetings with Russian Central Bank Governor Elvira, and I can never pronounce her name, Labuila, greenlighting the launch of his gold-backed token in October, and that was greenlighted, the BIS moved to fully ally itself in actually facilitating the non-dollar based settlement token through their Enbridge platform called the Unit, being accepted by the Russian Central Bank. Now, notably, through the use of distributed ledger technology, this BIS central bank digital token is actually decentralized. As I say, backed 40% by gold, 60% by BRICS currencies, but with each unit apolitical, and fully fungible. That's a huge deal. And while this unit differs from Glasniev's gold-backed commodity currency in so much as it's not specifically commodity-backed, it's fungible. This fungible BIS token will also be used to settle commodities, touching the multi-trillion-dollar oil and energy complex alongside every other commodity. Now, we've looked at this in far more detail in previous episodes, but the point we're trying to underscore here is that the rest of the globe has exposed the Fed as the only central bank still short gold. Ultimately, while trying to manage their retreat, the Fed has little option but to either print its way out of this dilemma, and they likely have to do this before the unit and Glasnev's commodity currency formally launch in October. So it really leaves very little time. Now, and there's an election coming up too. I think that the timing of this October launch is deliberately before the US election and the uncertainty thereof. Now, while this currency is apolitical and therefore sanction-proof, heavily sanctioned Russia is also reporting coming directly into the mix with the launch of Glasnev's option to gold-backed commodity currency. And we know that that's been beta tested separately. Liquidity providers figure gold will easily surpass $3,000 per ounce in dollar terms simply by this huge use of gold. It's partly driven by the Fed either having to either revalue Treasury gold from $40 to hide the extent, and that would be done to hide the extent of double counting of this over 8,000 tons of Treasury reserves, or forcing them to buy back their short bets at market. They can print cash, it can be done. And it's a process they're actually attempting to do now, if you look, but it's contained to how many traders they can wash and rinse into a series of higher stair steps, as we're seeing again today.
All right. Now, Andrew, what are you seeing here in the shorter term?
So, under the short-term chart chatter, what we're witnessing is a Western paper market managed retreat as physical gold prices are increasingly, of course, being settled outside of this CME LBMA, outside of their reach. And in fact, to sum up what we previously outlined, there's this split between the Fed, still the only central bank still defending a rising price of gold against the dollar, and on the other side of this, you have the entire globe, every single other Western-facing, global South-facing, doesn't matter, every other central bank has been adopting gold as an alternative first-tier asset class that rivals US Treasuries. So perhaps this is a good time to actually look at the charts. Now, we're recording this episode on Wednesday the 21st.
We're not going to look at the charts. We know it. Let's go. He does a silver one.
And it's between the AM
You can try. Hello and welcome.
Most black coffee has two ingredients you want, water and coffee beans. But they also have
the unbacked
He talks about silver. Where is that?
gaming, but it will be limited to what can be rinsed out of the casino. And given the upsurge in fresh institutional sideline buying complementing central bank buying, we would expect dips to be shallow and bought. And while the option structures in gold at between 2,500 and 2,550 are underwater, the risk is to the shorts. The cartel's wash and rinse cycles rely on how many naked long or short speculators have been drawn into the rallies or rigged sell-offs, and acting as a cartel, they can take the opposite side of the spec bets. However, with more and more institutional traders adding long gold portfolio hedges, even though they're never going to take delivery, what we refer to as the sticky longs, that is, the scope of how much of this paper market froth can be rinsed out is rapidly contracting. It's also important to note that while SHFE demand is speculative, it nevertheless creates the opposite effect of historically rigged CME LBMA sell-offs that seek to reclaim a series of lower highs as the next tricked-in CTA sell point. So that's what they try and do. And we've seen sideways, usually resulting in a sell-off, rising, pullback. We see another sideways, and we see a rising and a pullback. This is very, very bullish behavior. And it means that the speculators, there's insufficient speculators to be rinsed out. And as it evident, since the the Shanghai Futures Exchange launched on the 1st of March, the scale and duration of this spec buying in turn raises the physical support levels into a series of higher lows, creating irreversible upside technical damage driven by the need for central banks to buy bullion at any dollar-denominated price. A move into the 3000s may see some profit taking, but along the way, physical stair-step support likely raises to where we figure support will come back to is 27.37 or thereabouts. These lows tend to come at options expiration. And we do have option expiration next Tuesday, the 27th. And actually, that follows a UK holiday where there'll be no fixes on the Monday. So really, we should expect officials who are deeply offside on their multi-year accrued derivative bets to expect. So we should expect some defensive play, particularly around Powell's Jackson Hole testimony on Friday when this will be released. So they can try to use, what they're trying to use is the usual synthetic algos to try and game some volatility, literally to try and mark literally billions of dollars of derivative bets to market at a lower price. But rest assured, with only 45 sessions to go before the BRICS gold token launches, every central bank and sovereign is waiting for a dip sub 2,500 to load up. And here we go, ahead of the fix. You see some fix painting going on here. This is 2,500 level. So, basically they're trying to take out yesterday's prior low. This is the kind of game you should expect. But these pullbacks are very shallow. Sometimes $50, at worst $100. There's a tiny scale. That's tiny in the scale. But all it does is going to trigger fresh central bank buying below this round number. So they're waiting for a dip sub 2,500 to load up. As I say, we'll join them. And as we've seen since mid-February, dips will be short-lived.
All right, Andrew, and what are you seeing for silver?
Yes, I was waiting for that one.
So to answer Shane's question, the gold rally also spooked the SI cartel, blowing through 2,900 spot, which is here. And that also blew right through, taking out the rising 100 and the 50-day moving averages. And as expected, the 29, 27, 50% FIBO has been the action-reaction line. So as I say, where would most people be looking to pick this up? Would be on a dip into this level, which is probably why they'll try and front run it. Silver always tries to take out looks to hunt out fresh longs or shorts, depends on which way around it is, above around the moving averages. They can be relied to be there. But the Indian silver buying is off the scale, as is China silver buying. This is the level where commercials will be short covering into dips. Silver's fixed for a second time above 2,900 for the first time really since the 2nd of August.
So the key he said there was the demand. The buying demand is huge. So if you're worried about prices dropping, you can't, because things that are short supplied like this, right? Like the Rolex, if there's very little of them and huge demand, the price doesn't go down. If it is fixed like the comex is, it's very short in nature. It's a few days, and then it's like in gold, we saw it go down to, we got to 25.30, then it went down to 24.80, and it didn't last. There's too much demand. Prices back to 25, going to 26, going to 3,000. As long as you have demand for something, then that's fine. Like I was showing you about my sea salt. As long as there's demand, then they can sell this. I wanted it, they had it, I bought it. That's how a market works. So as long as there's demand, which there is from India and China and Saudi Arabia for silver, the price will be fine. There's not a lot they can do. Everybody's going, oh, the price is down, I'll buy more, as what we're doing, right? We see the price go to 27, 28. What do we do? It's a sale. Let's go buy some silver. It's cheap. We understand it. To answer your question, Pat, on most of the silver can't be recovered. No, silver wears out. Gold doesn't. Gold you can always recover. Silver wears out in the solar panels and the electric batteries and the cell phones or whatever. Silver wears out and it's gone. You can't reuse it. And that makes it even better because as it wears out, there's less, let's say it's 650,000 tons. I thought it was like 550,000, but we'll call it 650,000 tons. As it wears out, take 100,000 tons off the equation because that's wore out. So now there really isn't that much. Plus, the silver mines aren't making any more because they can't afford it. It's not profitable to have a silver mine. Silver comes from when the gold miners or the copper miners happen to dig up the silver, because I guess the gold and the silver all gets mixed in the earth. Well, remember, you can't print it. Whatever it is what it is. You cannot print gold and you cannot print silver. And that's why it never loses value. That's the key critical part of our lifeboats is there's not all of a sudden a million lifeboats. It's a limited amount and you pay a lot to get on the lifeboat. But once you're on the lifeboat, you don't want to get off the lifeboat to get back into the dollar, which is critical. You don't want to get back on the paper of the Titanic. So basically, these guys with all the money, I got $1 million in my 401k. They don't see the iceberg, because the iceberg isn't like in the Titanic where you see the iceberg and it hits the boat and the water's coming in. This is a very different animal. You're not seeing the lifeboat, or you're not seeing the iceberg. You're not seeing the water coming in. You don't even know you're on the Titanic. But what you do see is I need to get on the lifeboat. That's the problem, is how do we get people who are on the Titanic who don't see the iceberg, which is the debt, which is the inflation, which is the money being worthless? How do we get them from there to the lifeboat? But when they don't even know they're on the Titanic, they don't even know the iceberg is, and they don't know they're sinking. And that's what Luke's friend is going through now. He doesn't get his boat sinking. The iceberg's the inflation. He doesn't get that. And you got to come up with a good analogy like I just did with the Titanic and the iceberg. The inflation's the iceberg and the gold's the lifeboat. And so they have to understand that, but they don't want to. They're like, I got $4 million, la 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 la, and they're not understanding that that the value of their dollars are worth maybe 50,000. You really got about $100,000, let's say, there, not 4 million. Your 4 million can't buy you crap. The key is, since it's inflated because it's not backed by anything, you got to get to the lifeboat, which they don't understand that they even need a lifeboat. More or less, that gold's the lifeboat. Well, now let's get on the Bitcoin lifeboat. Bitcoin's not a lifeboat. Bitcoin isn't backed by gold either. All right, a little bit more, Mark.
Now, India is currently buying more gold than China, who's currently importing a record amount of silver. However, India is also competing to buy silver, coiling the disconnected oversold futures-driven silver price suppression scheme to extremes. If you remember, we'd already pre-drawn this higher low, slightly higher, but higher low. And if you remember, we also showed how this was deeply technically oversold when we drew in this circle here, this low, which was based upon this particular oversold condition. In fact, really, this buying had already become evident last Friday. As soon as spot gold tripped off, those buy stops at 2,500 that we just looked at a minute ago. So spot silver closed above 29 spot, and it's now closed above 29 spot for 3 sessions, but fixed twice above it. Also, Given that the SGE is importing record volumes of silver, the moment 2,500 spot gold was overcome, the SHFE traders began to also pull the buy trigger into deeply oversold comex and spot silver. And that's so spot silver for delivery and upcoming direct comex loadouts.
So in summary, Shane, under the short-term chart chatter, as we call it, we've been witnessing a Western paper market managed retreat as physical gold prices are increasingly being settled outside the CME LBMA's reach. And in fact, to sum up what we've previously outlined, this widening chasm between the Fed and the BIS is now becoming really hard to ignore because, as I say, on the other side of the globe, every other central bank is now long. Now, we looked at the evolution of this pivotal divergence in great detail, as I say, over the last 18 months, actually. But essentially, the BIS recognized, of course, that Glacios beta-tested upcoming BRICS gold-backed currency to be launched in October was impossible to ignore and has chosen collaboration. That is the summation of it. And we just have to connect the dots to the point that the US Treasury simply must revalue its rehypothecated gold assets to market. We've evidenced the Fed, the only central bank, as I say, short gold against the dollar. Its divergence has become hard to ignore. Whereas the BIS has a mandate to revalue physical gold as the only other liquid first-year asset class to trade against US Treasuries. So really, October the 22nd is the break point where the US Treasury, alongside every other global central bank, have to join in unison to revalue their respective gold revaluation accounts. A simple process where each central bank sells their current gold at market and rebuys it at market or thereabouts. So following Nixon's temporary 53-year.
Did that make sense? So they're going to sell it at market and buy it at market. Why would you sell your gold at 25.20 and buy it at 25.20? Something's missing there. I think they sell it at market now, but they buy it at a higher price would be my guess. Otherwise, it makes no sense. Yeah, we're going to sell it and buy it at the same price. I mean, I don't know about that. So we'll see what I assume it's going to be a higher, the selling it at market, but buying it will be at a much higher price. That's how I think. That's how I think I would understand it. Not, well, they're going to sell it at market and buy it at market. That would be the same price. That wouldn't make any sense.
Fiat experiment finally coming to an end. We're just about to witness, privileged to witness, the next pivotal event, the launch of the BRICS gold standard hegemony. In direct opposition to the Fed, the BIS has already moved to embrace a gold standard. So guys, there's only one question, and the only one question remains.
Yes, how much physical do we have? So October 22nd, we're going to be happy campers. See, everybody's saying, oh, the economy is going to crash and the market. No, they're not. If you have gold, all of the U.S. has to do is come out with a gold-backed currency. However, they're too stupid to be buying gold now. So all that happens is this currency and this currency are worthless, right? And you can add the British pound, and you can add the Swiss franc, and you can add the Japanese yen. They'll all be worthless because there's no demand for them. Everybody's going to the gold-backed system. There'll be 159 countries saying, yeah, we want gold. We don't want crappy dollars. I mean, they get it. They understand that the dollar not backed by anything is worthless. And that's where we're at. Pat, today is D-Day. You have to get it now. Well, I don't know about today, but soon. Like I said, next week it'll probably go down a little because it's expiration date. But with Monday being a bank holiday in the UK, we're not going to see that 2 o'clock drop. So we're going to see it go up and up and up. And then the US will try their little thing for options expiration and won't do shit. And then on Wednesday, it'll go to the moon. So maybe you can get it Tuesday when they try to lower the derivative. But outside of that, no. And silver, yeah, silver explodes. So silver becomes worthless, where gold is indestructible. That's really the big difference. That's why it's the gold standard. It's really the perfect thing. It's very limited and it can't be destroyed. It's exactly what you want from a dollar. So keep that in mind. So now we know for sure, BRICS October 22nd, gold-backed currency. Here we go. And my advice is if you're on the fence to buy more gold, like me, I got some money in my safe, and I'm now I have this interview Tuesday. I hope is good, and then I can go buy it. But you're on the fence. Just take some more money and buy more gold. It's a no-brainer. And in worst case, if you need the money, you go back and sell the gold for the money. You got to be careful. You'll lose the premium, right? So if I went and bought today at 2,600 and then I needed the gold in 2 weeks, I'd only get 2,500. It wouldn't be a good investment. But you've got to be holding it for a longer period of time and letting the price. Now, if in 2 weeks it goes to 3,000 and I paid 2,600 for it and I can get 3,000 spot, then it was still a good one, even though I hold my gold. My gold's being held for a long time. I am not buying it at 1,500 to sell it at 2,500 and make 1,000 an ounce. That's not what we're doing here. That's what the stock people do. Some people do it with houses, but not with gold. Gold's too valuable. It's too hard to get. I mean, once you sell it, good luck trying to find it again. So as I'm telling Luke for his friend, yeah, when he starts losing value on it. So imagine you've got $4 million in this IRA, a 401k, and in 2 months it's going to be worthless, be worth zero. Only you don't know that. So all we can do is tell them that that's the iceberg, is the BRICS gold-backed currencies, your iceberg. And we even know the date that we're going to get hit by the gold-backed currency. But how do you listen to it? How are you? Because you can't see it. We can see the iceberg on the Titanic. We can see the water rushing in, and we can see the lifeboats we need to get to before it sinks. This is all different because you don't see the iceberg. You don't see the water rushing in, and you don't see that you need a lifeboat. I see we need a lifeboat, and I do my best to get you into the lifeboats, but these people just don't get it. And this is why here's BRICS. If that doesn't get you into gold, I don't know what does. I mean, he said earlier in the show, it'll triple from where it is now. I think it'll be more 10 to 15,000, and it's at 2,500. So double, triple, quadruple, whatever. It's definitely going to be much higher than 3,000. Definitely much higher than 2,550. Or what are we at? 2,520 right now. So keep that in mind. That's why you're doing it. And you got to be stoic about it. It's the right move. The boat's sinking. You need to get into a lifeboat, and that's what the gold and silver are lifeboats. That silver is going to take longer, but it will do exactly what gold's doing. Nobody thought gold was going over 2,000 but me, and I knew it would go over 2,000. So people aren't, it won't go over 2. And then when it hit 2,100, then people are like, well, what the fuck's going on? Now when it hits 2,520, people don't know what to make of it. How many people know about BRICS? This whole Mark McGwire I just showed you. How many people, you could count people on your friends that even understand any of this, understand what BRICS is, understand who Mark McGwire is. You probably got 5 friends who even if they saw it would know what it is that we're doing. right? They just have no clue. But that's what's critical because they listen to CNBC or CNN or whatever they listen to. I'm in the gym and I'm watching in one of the TVs. There's like 8 TVs. One of them has the ticker. Oh, the Dow's this and the Nasdaq's this and Bitcoin's this. And I'm waiting for them to roll the gold. And they don't roll the gold. They don't say gold's 25.10. They don't even show gold. And then you're like, well, gold must be really high if they're not showing it. So here you have these guys just trying to block you from it. So you don't even have a clue that gold's at 25.20 because we're not even going to show the gold price. So I go to my gold, site and I see what the price is. And I always, before I go in the pool, it's what's gold at? And now when I tell the girls, they're all excited. When I tell Jenna, she's like, oh, we need to buy more. I go, oh, now you finally get it. Before you didn't. I was giving her gold. Gold doesn't do anything. And now it's 2,500. She's like, yeah, maybe we need to buy more of it. Now she sees the iceberg. And that's what you have with your family and your friends is to try to explain brics is the iceberg and gold is the lifeboat. And they have to be willing to listen. They won't listen. They won't understand it. They will not accept they need a lifeboat. Like Luke's friend, I got $4 million in a 401k. What do I need a lifeboat for? Because your money's worthless and it's all printed and brics gold is going to take over and the dollar is being de-dollarized. Nobody wants it. There's no demand and everybody wants gold. That's why you should be in it. You shouldn't even ask that question. It should be an automatic. How do I sell my 4 million and buy 4 million in gold? Should be his question. How he doesn't understand gold. How do you not understand gold? How do you not understand assets? An asset is my Mahomes card. An asset's my Canadian club. This is an asset. It's something you hold that has a value. Do you not think gold has a value? Really? Wow. How stupid are these people? How do you ignore gold or not understand it has a value? Pat, I've never met anyone in my life who knows anything about gold. Well, that's true. Some people know it, but it's just not taught. So how would they know it? Unless you run into a guy like me who buys the gold, who understands it, who have been taught it. You're right. They don't. But they understand what a Rolex is. How come they all understand Rolexes or Mickey Mantle cards, but they don't understand gold? How is that possible? If you bring up Rolex to any of those people, they know what those are, or an Omega, or, if you're into sports, a Mantle card, a Joe Montana card, they'll understand a Jordan card. They get that. So how can they get that and not get, but they don't understand gold? I think the biggest thing is this pushing the comex, keeping the gold price down. They see Rolex goes to 100,000 and the Mantle cards 60 a million. Get a good rookie, it's $10 million. So I think they see those prices go up, but they never see gold price go up, so they're not interested. Oh, I'd rather own Amazon stock. That goes up all the time. I can make money in that. I can't make money in gold. It doesn't go anywhere. So I think they know gold, but they don't realize why it doesn't go up because of COMEX and the price fixing. And they don't understand the price fixing's ending. They don't understand here comes brics, and they don't understand the inflation or the debt. So that's, I think, why. I think they know what gold is, but don't think it moves. So why would I put money in it? It's not going to go up. I think that's the problem. I don't imagine they don't know what gold is. There's too many movies where people have gold, or Kelly's Heroes, they found gold and behind enemy lines. I mean, there's enough of the movies that people should know what gold is, but don't realize that the price is fixed. They don't realize there's paper and physical gold. That's why they don't want gold. Well, why should I buy it? The price doesn't move. I think that's really the problem, which is what JP Morgan's been trying to do, is keep you out of gold and keep you into the stock market where they get you on the commissions or the real estate trust or the Madoff Ponzi scheme. It's funny how a Ponzi scheme, everybody knows. Nobody knows gold. It's just amazing. Hi, Greg and John. Same thing that was up in our last class. You saw gold. What did they say about it? I'm saying on the ticker, if you watch the ticker and the stocks go by, and then it says, here's the Dow, and here's the NASDAQ, and here's Bitcoin. They don't put gold on that ticker thing. Now, from what I hear, I guess they had the Jackson Hole meeting today with whatever that idiot's name is, Boog Powell, and he hit it at a rate cut. You can't cut it. Gold will really explode if you cut it, but you can't cut rates because the dollar's already fucked. It's already worthless. You saw gold that it's going up in price. Well, just come here and I told you gold's going up in price. It's the first thing I do in class. What's our gold price? Actually, it's probably done for the weekend. It ends Friday afternoon. Did it end? Yeah, it ended. Market closed. So it ended at 25.13, at 25.12. There you go. See, market closed. It'll open Sunday night about 7 o'clock. And what's unusual is we got the 10 o'clock up instead of the 10 o'clock drop. So they must have bought the option instead of, they must have called the option instead of putting it. So there you go, 25.12 and 29.83 silver. So as we discussed, silver, you just got to go buy 100 ounces and just, forget about it. And by October, my interpretation of what should happen, is gold will get too expensive. Gold will go 7,500, 10,000 an ounce. Okay, we're still going to do that. Gold will go 7,500, 10,000 an ounce, and it'll drive a lot of people. It won't be able to afford it. Or like me, I'll buy a quarter ounce, right? Or a half ounce. But what happens is then they start buying silver. And because silver's $30 and they realize silver is money, who's this idiot calling me? Oh my God, Alyssa. I was wondering when she was going to call me. Something happened with her phone. I got to take this call. Any football games tonight? No football. Football tomorrow. There's 2 college games. So gold's going up in price. RFK Jr. is going to support Trump. Yeah. Any football? No. Alyssa's my girlfriend here. So we've known each other a long time. She didn't have a phone. I kept calling and it said the phone's disconnected. So I need to call it. I need to call her back because I've been trying to get a hold of her, make sure she's okay. So I guess that's it. I will end the class. We will do football tomorrow morning. We've got 2 college games. All the college then ends. If you take the class or you buy the picks, you get tomorrow's games, and then you get the next week's games all included in the pack. Otherwise, good luck tonight, and good luck on your gold. Buy your gold, buy your silver. So silver, as the gold price gets too high, the silver price will get involved. It'll go down. It'll go up. Sorry. As the gold gets too expensive, it forces everybody to buy silver because that's still money. And just buy it, and just, it's going up, so just be patient. But it's not it doesn't go up to the next day and the next day. All right, let me call Alyssa back. Have a good day, everybody. I'll see you about 11 o'clock. You're welcome, Pat. Luke, take care. Greg and John, take care. And I will see you tomorrow morning. Ciao. www.teaserking.com. Sign up for the class or sign up for the picks for football.